Welcome back, investors. Jake here. In this video, let's do an update on my Schwab portfolio and let's talk about Altisource portfolio solutions. As of today, I'm going to completely sell out of this stock, and I want to explain to you why I originally got into it, what was my plan, and what has changed, and why I think this is a good time to exit this stock for me. But before we get into Altisource, let's just do a general recap on my Schwab portfolio. I've been making a lot of videos for you guys talking about new positions that I'm taking. The long calls that I've purchased on Apple, Berkshire Hathaway, Capital One, and Texas Instruments are trending up nicely, though I'm not expecting these really to start taking off until later in December. HCI, for those of you who have been watching those update videos and watching this stock, it currently has been selling off a little bit in the short term because all of these other high growth stocks like Lemonade have been selling off. The play with HCI is they're spinning off a subsidiary called TipTap, which is an insurance company comparable to Lemonade. So if Lemonade sells off, people think that the valuation for HCI isn't as good. However, I don't believe that argument. I think as soon as we get the details of the IPO for TipTap, shares of HCI should spring up nicely. Now for Altisource specifically, my cost basis was $7.75. I bought 600 shares for a value of $4,600. I'm currently up 57%, or about $2,667. I don't know how well this stock is going to do in the next 3 to 6 months, which is why I want to take profit today and then reallocate this money to other shorter term plays comparable to what I'm doing down here. Now, Altisource over the last 5 years has not been doing well. It's down 56%. The reason why is because this is a company that handles mortgage foreclosures. When the economy is good and the housing market is good, this company doesn't make as much money. However, if you zoom out to the max and see how well this company did over the 2008-2009 financial collapse and then the decline in the housing market, basically through 2012-2013, the stock was explosive. It was very impressive. However, as the housing market recovered, look what happened to Altisource. From its peak to its bottom, it lost 92% of its stock value. So my original thought when I added this stock to my watch list over a year ago is that the economy potentially might be entering a bear market. The housing market might pull back and property values could decline. That was a crazy idea I had a year ago when I originally researched this stock. Now, what we were all waiting for was for the government's moratorium on foreclosures to end. When the pandemic hit and everybody was locked down, people were losing their jobs, the government decided to put a moratorium on foreclosures. Well, for a company that handles mortgage foreclosures, this is definitely going to hurt your bottom line. So when the moratorium was announced that it was going to end, the stock popped. Then when it finally ended, the stock also trended up, in anticipation for Altisource getting back to at least business as normal pre-pandemic. Now, it shot up again here in October on news because they've been trying to diversify their business in the event that foreclosures don't uptick. On October 5th, they put out a press release saying they were going to be offering a new cryptocurrency service where people can use cryptocurrency to buy real estate. Kind of interesting. But the big announcement they made in October was that they sold one of their subsidiaries, Pointillist, and they got about $107 million or $145 million for it. Now, when the market cap of Altisource is only $200 million and they're able to sell one of their subsidiaries for this much, that was a pretty good deal for Altisource. But this was a short-term stopgap. Let's go look at Altisource's fundamentals, and I'll just show you how not well it's going. So this is their quarterly revenue. You can see it peaked in 2014. They did $296 million in revenue. It's now down to just $43 million. So since the pandemic hit, it's been dropping. We haven't gotten, obviously, the fourth quarter, a full quarter in which the moratorium has ended, so potentially it could be good news next quarter. but I'm skeptical. Let's look at net income, how much they're losing and burning cash every quarter. They lost 67 million. It's down here. They lost 7 million, lost 22, lost 18, lost 18. They haven't been able to cut costs and stop the rate at which they're burning cash. Something that makes me very nervous is, if a company's struggling and you got nothing to lose, why not do a second offering and offer new stock on the market? Now, Altisource the last 10 years has been really good about buying back shares, but if your company is struggling and you need cash and you don't want to take on any more debt, Altisource in the next 3 to 6 months might be tempted to offer new shares on the market. Let's actually go to assets and liabilities, because this is what gets me the most concerned, is if you look at their total shareholder equity, and this is assets minus liabilities, they went negative pre-pandemic. They went negative in 2019, and it's just been growing in the wrong direction quarter after quarter, and they basically have $142 million in negative shareholder equity. How does a company that has negative shareholder equity have any, positive share price valuation at all? And once again, it's potential in the future. But what is the potential of the mortgage foreclosure industry upticking in the next year, couple years? And I'm just not sure, because when you look at the stats, foreclosure activity sees 6 consecutive increase, but the rate is slowing. It's slowing because home prices keep going up. Let's see here. 78% of U.S. markets hit with double-digit home price increases. Not good if you're a home buyer, but pretty amazing if you're a home owner. So the median price of a single-family home rose nearly to, in all 99% of 183 markets that are being tracked, with 78% in double-digit increases. So there's no reason that you should be foreclosed on if your house has equity in it. If the value of the home increases, you shouldn't be underwater on your mortgage. You shouldn't be foreclosed on. If you can't make your mortgage payments, just sell the house, pull out the equity that you can, and get out of the deal. People are foreclosed on when basically they're underwater on their home because they either paid too much or property values have declined, but that's just not happening. In addition, people should be able to pay their mortgage if they can find well-paying jobs. And the economy is roaring right now. Wages are increasing. In October, the payroll added 531,000 jobs. Everybody I know in the local area where I am is looking to hire. So do I see a slowdown in the housing markets in the near term? And I just don't. So I don't see this as good news for Altisource in the short term. When we look at their technicals, there looks to be a level of support and resistance here at the $12 mark. But when we look at the shorter term trend with the 20-day moving average, it got underneath it, sold off, came back, and then it's been bouncing off of it. So it's green the last 2 days, but my suspicion is that as soon as it hits this 20-day moving average again, it's probably going to sell off once again as all the moving averages converge. Where will it converge? Probably in the $10, $11, or $12 range. So for those reasons, I will be selling out of my Altisource position completely today. That should free up about $7,300, in which I can redeploy to other stocks. I will make those videos for you next week or the week after, telling you what new positions I will be adding to my Schwab portfolio. If you guys like these kinds of videos, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions or stock suggestions of your own, let me know in a comment down below. I love hearing from you guys. Till the next video, take care.